U.S. market, the North American market, well into its own recovery stage. Lower growth from a GDP perspective, but still recovering. When we were coming out of this recovery, it was our expectation it was going to be this more of a slow but steady recovery, and that's largely what we've seen thus far. But now, as we're looking at the data, we're starting to see this pivot from a little less slow and a little more steady. So we're starting to get into that next step function, if you will, which is great news. Great news for the automakers and great news for the suppliers as well.
A big part of that recovery, automakers across the board are planning launches, many launches within the next, say, 2 to 3 years. How do you see that playing out, and what could impact that?
This will be a very busy period over these next 2 to 3 years, and it's probably one of the biggest items that keeps both suppliers and automakers awake at night right now. We've got about 20 launches in North America this year. Next year, we'll go to about 41 launches. It's an exciting time to be in the industry in terms of more profitability, some exciting new products, but it's also a very dynamic time and challenging time to the extent that we're trying to launch all these new vehicles. So as we look at this, I would expect there to be some more volatility, as suppliers are, working ever so hard to keep up with volumes, and automakers as well keep up with demand, and then also launch these new vehicles. Folks are profitable really on both sides of the spectrum. Now the natural progression is, okay, now we have to get back to business, and we have to start talking about pricing. Pricing pressures from the automakers, if any supplier thought pricing pressures were going away, they were kidding themselves. Of course pricing pressures are going to come back as the automakers are looking to maintain and grow profitability. And if on the supplier side, if I'm on the automaker side, of course, if you want to get the latest innovation from suppliers, you need to change the way you deal with suppliers. That means you need more realistic planning volumes. You need to work with them when cost pressures go through the roof on raw material costs, commodity costs. You have to be cognizant of your suppliers' financial viability. When you're suddenly faced with a stock out situation, not getting those parts, it can have broad ramifications. So I do believe both sides get that to a much greater degree than ever before.